Brisbane house prices are plummeting. In fact, they are falling at the fastest rate across all Australia. Just how sharp are they falling? Sharper than Valerian steel? Sharper than James Bond in a suit? So Brisbane's leading the way with the steepness of house price declines, and this could be a massive warning for the rest of Australia. So stick around because we're going to consider why Brisbane house prices are falling so fast, what it could mean for the Australian housing market, and my personal thoughts on the Brisbane housing market going forward. I'm Biko Konstantinos, and that's what we're going to talk about today. Brisbane is situated on the east coast of Australia in the state of Queensland, sometimes known as the Sunshine State. Brisbane is the third largest city in Australia by population, with Sydney and Melbourne being the largest. Brisbane has the Sunshine Coast to the north and the Gold Coast to the south, which are two of the most popular beaches in the entire world, and it only takes about an hour or an hour and a half to get to them from Brisbane. So Brisbane's a great place to live, but what's happening with the housing market? It's plummeting. For some of the stats, I'm going to look at this article from Macro Business. Brisbane saw a house price decline of 1.4% in December, which forms part of the whopping 5% decline in the final quarter of 2022. Now, 5% decline in a quarter is very sharp falls, because if that rate of decline continued, it would add up to a 20% decline over a year. This decline from Brisbane is the sharpest in the entire nation and has taken Brisbane house price values down 9.2% from their June 2022 peak. So Brisbane actually peaks later than Sydney and Melbourne, but since then, their declines have been sharper. This graphic shows a historical picture of house declines in Brisbane. This black line here is our current decline happening right now. And you can see there are only two other times where the Brisbane housing market fell near that 10% mark. And it's only ever fallen a maximum of 10.8%. So this current decline looks easily set to beat that 10.8% to become the biggest house price fall in Brisbane's history. So why are Brisbane house prices falling so sharply? Well, the main reason is because they rose so bloody sharply. From the lows after COVID, Brisbane house prices rose over 40%. And you can see here how they massively outperformed Melbourne and Sydney. Adelaide, shown here in red, was the only other city that saw such dramatic rises as Brisbane. So we know now that these rises were artificially inflated due to ultra cheap debt. So once those interest rates started rising, a city such as Brisbane, which saw dramatic growth, is likely to see just as dramatic falls as borrowing capacity falls off a cliff now that interest rates have risen 3% in 8 months. And if you don't believe that house prices were caused due to low interest rates, check out what happened as soon as the RBA started lifting them. Pretty much straight after, house prices started a very steep decline. Perhaps scariest of all is how Australia's interest rates have been steadily declining. The official rate was previously held around that 5-6% mark, but after the global financial crisis seen here, we just kept reducing, then COVID hit, we reduced to zero, but all this cheap money just created a housing bubble. So even though we've seen 8 successive interest rate hikes, the current interest rate of 3.1% is still historically very low. And that's what happens when you try and continually stimulate the economy by making debt cheaper and cheaper and cheaper. And to make matters even worse, while Brisbane and other cities were going on this massive speculative housing bender, for 12 months, the RBA forecast that they wouldn't have to raise interest rates until 2024. How's that for an irresponsible prediction when house prices were literally selling on the day that they were listed? For that forecast, this is what RBA Governor Phil Lowe had to say.
Do you accept that you did in fact induce Australians to take out mortgages on the basis that interest rates wouldn't rise until 2024? And do you think you owe those people an apology?
Well, I'm certainly sorry if people listened to what we'd said and then acted on that, what we'd said, and now regret what they had done. So that's regrettable.
Are you really sorry, Phil? Who I feel the most for are first home buyers who are desperate to get into the market and bought around this peak here. They would have been scared that they'll never be able to afford a home as prices just kept skyrocketing, especially with Phil Lowe's prediction of no rate rises, and many people might have overextended themselves and borrowed as much as they could while interest rates were at the lowest level they've ever been. So sadly, buyers at the peak will have a house now that's worth around 10% less, with a strong possibility that prices will keep falling, but they're stuck with the ultra high mortgage they probably had to borrow just to get into the ultra expensive market. Let's consider some of the positives for the Brisbane housing market. First, Brisbane is seeing the highest net immigration from other states. So more people are moving from other states into Brisbane and other areas of Queensland than anywhere else. And this is expected to continue, so higher population means more demand for housing. Secondly, Brisbane house prices are significantly lower than Victoria and New South Wales. For that reason, Brisbane has always been a favourite for investors in Sydney and Melbourne because they can buy property cheaper, and that also goes for foreign investment. And thirdly, because Queensland is hosting the 2032 Olympics, Brisbane being the capital of Queensland should benefit from massive amounts of investment and new infrastructure, and that should be a positive for the Brisbane housing market. So there's definitely some great positives for the Brisbane market, but there's also very significant risks for both Brisbane and the rest of Australia. As I've mentioned in previous videos, Australia's housing affordability has deteriorated to shocking levels. Just 30 years ago, you only needed 3 times the average wage to buy a house. But now, in most capital cities, it's closer to 10 times. And because houses have become so expensive, we are much more at risk of a significant house price correction or even a crash. Now, there's 2 huge risks to be on the lookout for. First, if interest rates continue to rise, and if they remain at those elevated levels, there could be big trouble ahead. That's because Australians have so much debt into property, interest rates now have a much bigger effect than they did in the past. If interest rates rise, many people simply won't be able to afford the current prices, which inevitably means that prices have to drop. And the other huge risk would be a global recession. If the economy starts declining, that will affect business across the board, which means more people will start getting laid off and unemployment will rise. And if unemployment rises while interest rates are high, we'll start to see more and more forced selling of property. And that's a huge risk to any housing market because it can result in a total collapse. So what's my personal thoughts on the Brisbane housing market? Well, I just think that prices rose way too high, way too quick. There was massive speculation, fear of missing out, and just plain craziness. 40% rises in 2 years is not sustainable and is frankly ridiculous. The aftermath is disgustingly bad housing affordability, a rental crisis, and many would-be first home buyers pushed to the sidelines, while those who own multiple properties are sitting pretty and have all the advantages of being able to purchase even more properties. So because of these unsustainable rises, I think Brisbane market has plenty more to fall. But as to how far, that's the $1 million question. At this stage, I don't see prices falling back to pre-COVID levels. However, they certainly could if interest rates rise higher than we currently expect. And the expectation is probably only 1 or 2 more rises, and then many feel that the RBA may even start reducing rates by the end of 2023. But I'm not so sure about that because I think many central banks are going to be very wary about reducing rates too quickly. But one thing's for sure, it's going to be a very bumpy ride. I'm Biko Konstantinos.